Imagine waking up to the deafening shriek of air raid sirens, a sound that has sadly become all too familiar in the Middle East. But this time, something is fundamentally different. You look to the sky, expecting to see the familiar intercept trails of the Iron Dome and David Sling safely neutralizing incoming threats. Instead, the sky violently fractures. A swarm of deadly submunitions rains down over dense residential neighborhoods, bypassing the world's most advanced multi-billion-dollar air defense network. The unthinkable has just happened. The escalation we've been warning you about on this very channel is no longer just a hypothetical geopolitical theory. It is today's grim, bloody reality. Central Israel is burning. Civilian lives have been tragically lost in their own homes, and the global macroeconomic chessboard has just been flipped permanently. What happens when the Middle East tips past proxy conflicts into an all-out ballistic missile exchange using internationally banned weaponry? And more importantly for you watching at home, how will this historic shockwave shatter the global economy, freeze global supply chains, and completely restructure your investment portfolio? Will this conflict finally trigger the ultimate collapse of the fiat system and initiate the true dollar endgame? Let's dive in. Welcome back to Dollar Endgame. If you are new to the channel, make sure you hit that subscribe button and ring the notification bell because we are breaking down the raw geopolitical and macroeconomic truths that the mainstream financial media either ignores or simply doesn't want you to understand. We don't do fluff here. We deal in hard facts, hard money, and the harsh realities of global power dynamics. Right now, we are looking at a massive, breaking escalation in the Middle East that threatens to drag the entire globe into an economic abyss. Let's get straight to the facts of what just occurred. Overnight, from Tuesday, March 17th, crossing into the early morning hours of Wednesday, March 18th, 2026, Iran launched a lethal, highly coordinated missile barrage directly targeting central Israel. But these were not your standard run-of-the-mill projectiles. According to official statements broadcast on Iranian state television and quickly verified by harrowing on-the-ground damage assessments, Tehran fired advanced Khorramshahr 4 and Qatar ballistic missiles. What makes this strike historically unprecedented is the payload. These missiles were carrying internationally banned cluster munitions. For those who aren't military analysts, let me explain what that means. A traditional ballistic missile carries a single, massive, high-explosive warhead. Defense systems like the Iron Dome calculate the trajectory and shoot it down in the upper atmosphere. Cluster munitions, however, are a defense system's worst nightmare. They are designed to open midair, dispersing dozens or even hundreds of smaller explosive bomblets over a massively wide area. They are notoriously difficult to track and intercept because you are suddenly dealing with a swarm rather than a single target. The tragic result of this tactical shift is now making global headlines. The defensive shields over central Israel were mathematically overwhelmed in specific sectors. An elderly couple in their 70s was killed in Ramat Gan, a major city in the Tel Aviv district, when a cluster bomb struck their residential building mere meters from their safe room. The devastation didn't stop there. Shrapnel and secondary mid-air explosions caused severe infrastructural damage to Tel Aviv's vital Savidor Central train station, sparked widespread fires in Petah Tikva, and destroyed vehicles in Bnei Brak. This latest attack has brought the Israeli civilian death toll in this specific three-week war to at least 14. Why did this happen now? And what triggered this horrific barrage? Iran's elite Islamic Revolutionary Guard Corps, IRGC, released a fiery statement claiming this attack was direct, calculated revenge. Specifically, it was retaliation for the recent Israeli and U.S. assassination of Dr. Ali Larijani, Iran's top security chief, along with several of his companions. But to truly understand where we are going, we need to zoom out to the bigger picture. We are currently approaching the third week of a direct, intense, and overtly kinetic war instigated by the United States and Israel against Iran. The stated goal of this Western coalition has been absolute: to entirely dismantle and destroy Iran's nuclear weapons program before it reaches the point of no return. This war has already seen the unprecedented assassination of Iran's supreme leader and numerous top-tier military and political officials just weeks ago. The stakes literally could not be higher. In fact, just hours before this cluster missile attack on Tel Aviv, an unidentified projectile struck dangerously close to Iran's Bushehr nuclear power plant. The International Atomic Energy Agency, the IAEA, is now issuing frantic warnings about the severe risk of a catastrophic nuclear accident if maximum restraint isn't immediately applied. But restraint is the last thing on the minds of the generals in Tehran, Washington, and Tel Aviv. Iran is proving it still has devastating teeth, a deep subterranean arsenal, and the sheer will to use highly controversial weapons to strike the commercial and civilian heart of its enemies. But here's where it gets incredibly interesting for our viewers, and where it directly impacts your bank account, your savings, and your future. War is never purely about territory, religion, or ideology. Throughout history, war is fundamentally about economics, resources, energy, and currency. When cluster bombs land in the suburbs of Tel Aviv, the financial tremors are felt instantly. On Wall Street, in the banking centers of London, and across decentralized crypto exchanges worldwide. Let's break down the immediate macroeconomic shockwaves. The first and most critical domino to fall in any Middle Eastern escalation is always energy. The Persian Gulf countries, Saudi Arabia, the UAE, Qatar, Kuwait, are watching this unfold with absolute paralyzed dread. Look at a map. Iran controls the entire northern coastline of the Strait of Hormuz, roughly 20% of the world's global oil supply, and a massive portion of its liquefied natural gas flows through that narrow 21-mile-wide aquatic choke point every single day. If this conflict escalates from tit-for-tat missile barrages to full-scale regional war or naval blockades, Iran has the asymmetrical capability to shut down the Strait of Hormuz using anti-ship missiles, sea mines, and fast-attack drone boats. What does a closed Strait of Hormuz mean for you? If that critical artery is severed, top energy analysts project that crude oil could instantly spike to $150, maybe even $200 a barrel within weeks. Imagine waking up, going to the gas station, and seeing fuel prices double overnight. But it's not just about the cost of your commute. Oil is the literal lifeblood of the global supply chain. Plastics, modern agriculture, fertilizers, aviation, global shipping, manufacturing, everything requires petroleum. A $200 barrel of oil means an immediate, violent, and uncontrollable resurgence of inflation. Remember the agonizing inflation crisis of 2022 and 2023? That would look like a minor economic speed bump compared to a systemic global energy shock of this magnitude. This scenario presents the ultimate nightmare for the Federal Reserve. The Fed, which has been desperately trying to manage a soft landing and ease the economic burden on the American consumer, would be trapped in an inescapable paradox. Do they hike interest rates back up to double digits to crush the oil-driven inflation? If they do, they will bankrupt the U.S. government, trigger a brutal global depression, and detonate the largest sovereign debt crisis in human history. Or do they flip the switch on the money printer, unleashing trillions of newly created dollars to bail out the economy, stimulate defense spending, and artificially suppress bond yields? If they choose that path, and historically, governments always choose to print, they will sacrifice the purchasing power of the US dollar forever. This is the exact mathematical trap we talk about every week on this channel. This is the dollar endgame. You cannot fund a modern, multi-front, trillion-dollar war with high interest rates and a balanced budget. War equals inflation, period. Now, let's pivot to the financial markets. How are different asset classes reacting right now? And how should you logically position yourself to survive the coming storm? First, defense contractors and aerospace conglomerates are predictably seeing massive capital inflows. When multiple warhead missiles and cluster munitions are deployed, governments around the world wake up in a cold sweat, realizing their current air and missile defense shields are terrifyingly inadequate. We are going to see a multi-hundred-billion-dollar global rush to upgrade anti-air systems, develop directed energy weapons, and deploy autonomous drone interceptors. The military-industrial complex is bracing for a historic windfall. But beyond defense stocks, the real battleground for the everyday investor is in safe haven assets. Gold is doing exactly what gold has done for over 5,000 years during times of war and imperial collapse. acting as the ultimate uncensorable store of value. When fiat currencies look mathematically doomed and geopolitical stability shatters into a million pieces, central banks, sovereign wealth funds, and retail investors flee in panic to physical gold. If the petrodollar system fractures further because of this war, gold will be repriced not by market speculators, but by the raw desperation of nations trying to settle international trade without the US dollar. But what about crypto? This is the ultimate macro wildcard. Over the last few years, Bitcoin has been widely debated and adopted as digital gold. Yet, in the immediate chaotic aftermath of geopolitical shocks, we often see Bitcoin temporarily sell off. Why? Because it trades 24/7 and highly leveraged traders get violently liquidated to cover margin calls in other crashing markets. It acts as a risk-on asset in the very short term due to liquidity crunches. However, zoom out. The macro fundamentals for Bitcoin have never been stronger than in this exact scenario. If the US government has to fund a prolonged, direct war against Iran, a heavily fortified nation of nearly 90 million people with a formidable, battle-tested military apparatus, how are they going to pay for it? The U.S. national debt is already spiraling completely out of control, compounding at a terrifying rate. The government cannot possibly raise taxes high enough to fund a multi-trillion-dollar Middle Eastern conflict without causing a domestic revolt. They will have to print the money. They will have to monetize the debt. And when the central bank money printer goes into hyperdrive to fund bombs, aircraft carriers, and wartime domestic subsidies, strictly scarce assets like Bitcoin are mathematically programmed to appreciate aggressively against the rapidly debasing fiat currency. Bitcoin is a stateless, neutral money with a hard cap of 21 million coins. It cannot be diluted by a central bank to fund a war, and it cannot be seized if you hold your own keys. If we see a full-scale kinetic war, expect intense short-term volatility in the crypto markets, followed by a massive structural bull run as the grim reality of infinite fiat debasement sets into the minds of institutional investors. Let's do a terrifying thought experiment. What if this escalates to a full barrage? We're talking about a scenario where the situation devolves past this single retaliatory strike for Ali Larijani. What if Iran doesn't just fire a few dozen Khorramshahr and Qadr missiles, but decides that its very survival is at stake and empties its entire subterranean arsenal? Imagine 5,000 ballistic missiles, cruise missiles, and suicide drones launched simultaneously. This wouldn't just overwhelm Israel's defenses, it would mean targeting U.S. military installations across the Persian Gulf, in Bahrain, Qatar, and the UAE. If a full barrage occurs, the entire regional infrastructure could face total, catastrophic collapse. Desalination plants in the Gulf, which provide vital drinking water to millions of people in desert nations, could be disabled in minutes. Major oil refineries and export terminals in Saudi Arabia could be struck, either in the crossfire or through a deliberate, scorched earth expansion of the war. Global markets wouldn't just experience a dip or a correction. We could see extreme circuit breakers triggered on the New York Stock Exchange. We could see the complete cessation of commercial air traffic over half the globe. Furthermore, the economic decoupling of East and West would accelerate exponentially. Countries like China and Russia, who have deep strategic, military, and energy partnerships with Iran, might step in to bypass Western financial sanctions entirely. This could trigger the immediate launch of a new gold-backed or commodity-backed BRICS trading bloc that completely locks the US dollar out of Eurasian and global South trade. The weaponization of the SWIFT system would finally backfire, ending the dollar's exorbitant privilege overnight. This isn't science fiction. This isn't fear-mongering. The cluster missiles that devastated Ramat Gan, killed innocent civilians, and severely damaged the Salvador station are a glaring, blinding warning light on the dashboard of the global economy. The tragic loss of life is the horrific human cost of a global geopolitical architecture that is fundamentally fracturing before our very eyes. We are witnessing the chaotic death throes of the post-World War II unipolar world order and the violent birth pangs of a highly unstable, multipolar reality. The question is no longer if the financial and geopolitical system will break, but when the final, unrepairable crack appears. The decisions made in the war rooms of Washington, Tel Aviv, and Tehran over the next 72 hours will determine the economic reality for the entire globe for the next decade. Will Israel respond with a devastating, bunker-busting strike on Iran's deeply buried nuclear facilities? Will Iran deploy even more destructive, unconventional payload technologies? And will the Federal Reserve be forced to finally choose between the collapse of the U.S. Treasury market or runaway double-digit hyperinflation? We are tracking this rapidly developing situation hour by hour, cross-referencing military movements with bond yields, energy futures, and crypto liquidity pools. You need to be prepared, you need to be hedged, and you absolutely need to understand the macro forces at play. Ignorance is no longer an excuse. It is a financial death sentence. Let me know your thoughts in the comments below. Do you think this unprecedented cluster missile barrage is the definitive start of a full-scale grid-down regional war? Or will back-channel, desperate diplomacy step in at the 11th hour before the global economy is dragged entirely into the abyss? More importantly, how are you protecting your portfolio and your family's purchasing power right now? Are you stacking gold, buying Bitcoin, retreating to cash, or investing in defense stocks? If you found this deep dive analysis valuable, make sure to completely smash that like button, subscribe to the channel, and hit the bell icon so you never miss an urgent update. The algorithm hates this kind of raw truth, so your support is what keeps this channel alive. In our next video, we're going to dive deep into the secret financial war being waged right now between the BRICS nations and the U.S. Treasury, and examine exactly how it perfectly ties into these escalating Middle Eastern conflicts. Until then, stay safe, stay hedged, stay informed, and I'll see you in the next one.